Hello everyone and good morning. This is Rachel live from 𝐊𝐚𝐥𝐤𝐧𝐞 Studios. You're watching the opening bell. Last week we saw the inflation expectations in the market psychology carving out a different market scenario altogether. Let us cast an eye over how market charters panning out today. Tracking last week's closing of the US markets, the ASX 200 is up today, gaining 0.48% to 7,048 at the market open. Strong gains from Ampol, Aristocrat Leisure and Viva Energy seem to be pulling the ASX strings. On Friday, the ASX 200 finished the session up by 0.45% at 7,014.2. However, the benchmark index was still down by 0.94% on a weekly basis. On the other hand, Wall Street last rallied in a sharp rebound as investors set aside inflation worries and seized the opportunities in beaten down shares, which were hammered earlier during the week, with the shift back into riskier assets, putting pressure on the US dollar. The jump in the US equities was in sync with buoyant global sentiments as investors put the concerns on the back burner that rising prices could lead the US Fed to raise interest rates sooner than expected and reduce the affordable supply of money that had propelled financial markets during the coronavirus pandemic. The Dow Jones rose 1% on Friday. The S&P 500 closed 1.5% up, the highest gain since March the 26th, while the Nasdaq Composite shot up by 2.3%, its biggest one-day gain in around 2 months. Despite a decent rebound from the lower levels on Thursday and Friday, the US stocks still marked their worst performances in almost 3 months. That's on a weekly basis. For the week, the S&P 500 lost 1.4%, while the Nasdaq Composite was down 2.3%. Mega-cap blue chip stocks such as Apple, Microsoft and Tesla had taken a decent beating last week on concerns over their high valuations. They did provide some relief to investors on Friday, though. Looking at last week's market performance now, inflation expectations ruled the investor psychology, while the weak retail sales data eased the concerns a little bit. The last week was full of volatility, with the CBOE VIX shooting up 28.93, a level not seen since the 8th of March. The fear of rising prices spooked market participants, and despite assurances from the US Fed, it does not expect to tighten its monetary policy anytime soon. Some investors worry policymakers may be misjudging inflation risks. That being said, the data released on Friday revealed the US retail sales unexpectedly stalled in April 2021 as the boost from massive stimulus packages did wear off. This further strengthened the argument that the economic recovery was far from roaring and that interest rates would not be hiked anytime soon. That did appear to calm the market volatility a little bit. Let us zoom our lens now on bond yields and the dollar movement. The US dollar did fall on Friday as risk appetite recovered and the prospect of rate hikes occurring sooner faded. The US dollar index shed 0.5% to 90.312, while the Australian dollar was up by 0.68% to 0.7779. The muted retail sales data put pressure on benchmark 10-year Treasury yields, which plummeted to 1.6335%. The drop in yields also flattened the yield curve. The spread between the 2- and 10-year Treasury yields narrowed down to 148.3 basis points, which had widened earlier during the last week when rising inflation concerns did spook investors. Back to the domestic share market now. Let us look at themes specific to Charter of the Day. Australian energy players such as Santos, Origin Energy and Woodside Petroleum will be under the spotlight today. Oil prices did rebound on Friday to pair some of the losses witnessed the previous day. That was as major US fuel pipeline restarted. The weaker dollar increased the appeal of the commodity for holders of other currencies, though gains were capped by the coronavirus situation in major oil consumer India. Brent crude rose 2.5% to $68.70 a barrel, and the US West Texas Intermediate crude shot up by 2.4% to $65.36 a barrel. Australian gold miners such as De Grey Mining, Gold Resources, Newcrest Mining, and also Northern Star Resources could trade higher today. We'll be keeping our eyes on those for you. Moving on to the gold theme, correction in the US dollar and Treasury yields added to the appeal of non-yielding bullion, with spot gold rising 0.9% at $1,843 an ounce. On the other hand, iron ore players such as Fortescue Metals, Rio Tinto, and the BHP Group are bound to trade in red territory today. Iron ore prices dropped sharply on Friday, closing out a volatile week after regulators in two Chinese cities, Shanghai and Tangshan, warned local steel companies against price gouging, collusion, and also spreading false market information. Looking at the crypto charter now, Bitcoin plunged 5.5% to $49,358 on Sunday. That's as reports of a regulatory probe into crypto exchange Binance and also Tesla's U-turn on accepting the token as payment due to environmental concerns. They've shaken the confidence of the crypto bulls, while subdued inflation expectation divined the US market charter overnight. Let us look at how the major newsmakers in the Australian share market are going today. After the Australian government announced a $2 billion refining package, petroleum player Ampol announced that it would continue to refine at Lytton. That's until at least mid-2027. Next big news is the casino player Crown Resorts has rejected Blackstone's bid on advice of its financial and legal advisors. The board has said that Blackstone's $12.35 revised proposal undervalued the company and has unanimously concluded it's not in the best interests of Crown shareholders. The earnings update seemed to be driving the market charter today, with Australian gambling machine manufacturer Aristocrat Leisure announced a statutory net profit after tax of $346 million for the 6 months ending 31st of March 2021. The normalised net profit after tax and before amortisation of acquired intangibles was $412 million. That's up 12% the same period a year ago. Next, agribusiness Elders announced a revenue rise of 22% to $1.1 billion, while profit after tax surged by 31% for the 6 months to the 31st of March 2021. Moving on now, Syrah Resources has achieved its first fully integrated production of active anode material at its project in Vildala in the United States. The next earnings update comes from Australian multinational corporation that manufactures fertilizer, explosive chemicals, and also a mining service, Incitec Pivot. For the first half of the year, the company reported a 6.7% fall in revenue from ordinary activities and also a net profit decline of 44%. Ardent Leisure says its revenue for its US-based main event entertainment business surged 40% in April compared to the same month 2 years ago. That's all from me for now. Stay tuned to 𝐊𝐶𝐥 TV for more live updates across the economy, markets and sectors. I'm Rachel signing off now for 𝐊𝐶𝐥 TV.